Hello and welcome to Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. It's a positive start to the week on Dalal Street. The Sensex gains over 250 points. The Nifty up over 80 points. IT, metals and select financial stocks lead the rally today. Jio Financial Services marks the first listing from the Reliance Group in close to 2 decades, lists at 262 rupees a share with a market value of about 1.6 lakh crore rupees, making it the second largest non-banking finance company in India. Titan acquires an additional 27% stake in D2C jewellery brand Carrot Lane for over 4,621 crore rupees, takes its stake to over 98%. The deal marks the second largest exit for an e-commerce founder after Flipkart founders sold their stake to Walmart. CAG audit report reveals 93% routes under the Udan scheme failed to sustain operations beyond the 3-year concession period. 52% of the routes did not materialize at all. The report directs for an audit of the Regional Air Connectivity Fund Trust, also highlights that there hasn't been an audit of individual airlines on Udan since 2018. Sun Farmers Dilip Sanghvi says private equity companies are becoming important players in the pharma sector, but adds that Sun Farmers' size prevents any large transaction. Sanghvi expects specialty business to drive growth. That is a Money Control exclusive. Medical Commission bars doctors from participating in seminars, workshops or conferences sponsored by pharma companies or the allied health sector. Also bans them from accepting consultancy fee, honorarium from companies or corporate hospitals. Doctors flouting the rules could face a 3-month license cancellation. Prominent wholesale markets in Maharashtra protest against the government's decision to impose a 40% export duty on onions as prices soar. Farmers call the government's move premature, seek relief. ISRO releases new images of the surface of the moon as the Vikram lander gears up for touchdown on the surface of the moon around 6 p.m. on the 23rd of August. This is the first attempt by any country in the world to land a rover on the south pole of the moon. Well, those are the top stories that we are tracking this evening. The government has decided to impose a 40% duty on exports of onions, and this will be in place till the 31st of December as rising prices have sparked fears of inflation. Remember, vegetable prices have seen a surge of over 37% between June and July. Government-owned cooperative NCCF will sell onions from its buffer stock at 25 rupees a kg in Delhi NCR across prominent wholesale markets in Maharashtra. Meanwhile, there is a protest against the government's decision to impose a 40% export duty on onions as prices have moved higher. Farmers have called the government's move premature. And joining us now to take this discussion forward is Rohit Kumar Singh, the Consumer Affairs Secretary. Mr. Singh, always a pleasure. Appreciate you joining us here on CNBC-TV18. The last time you were here, we were talking about tomatoes, and that quite literally had left consumers in tears. And now it is the turn of onions, even as the heat on tomatoes continues. I want to understand from you where things stand as far as onions are concerned. The government intervening now by way of offering consumers the price of 25 rupees a kg. Take me through the procurement process for this.
So like you said, I promised you in the last interview that we will handle the tomato situation, and we have been able to handle it well. If you see, the prices today of tomatoes have really fallen both in wholesale and retail mandis, and NCCF is selling today at the rate of 40 rupees per kg. So I want to assure you that for onions, there will be a similar containment, if at all there would be any, in terms of inflationary trends. And procurement for buffer is a regular process. We already have 3 lakh tons of onions in our buffer, both with NCCF and NAFED. And we've asked them to procure 2 lakh tons more, and that will benefit the farmers. So there is no reason for worry for farmers, and the stuff which was going out of the country in form of exports. So the export duty, which your news item mentioned, will put a check on that, and it will improve the affordability and availability within the country.
Yeah, let me just address that issue, sir, because what we are seeing across mandis in Maharashtra, trading coming to a halt as farmers protest against this imposition of a 40% export duty. As you said, the government intends to up its procurement, but at what price are you going to be procuring from the farmers? Farmers at this point in time are saying that, look, this is a premature move on the part of the government because prices actually hadn't run up as much for this intervention to have been made in terms of an export duty. How do you respond to that?
So I don't think it is premature. Prices were going up, and if you compare with last year at the same point in time, we are up by in excess of 10%. In terms of seasonality of onion prices, this is the high price season, and the prices usually every year go up from here. So this year, although the production of onions has been similar to that of last year, but there is issue pertaining to the quality and pertaining to the content, moisture content in the onions. So as you would appreciate, when there is more moisture content, the perishability becomes higher, and the process of storage also becomes complex. So in order to avoid any unprecedented rise due to this whole issue of perishability, we have decided to take this step, and nobody will be made uncomfortable here. The procurement is not done at a prices which are below the market prices. There is a formula adopted by NCCF and NAFED, which is based on the modal price, and it always provides comfort to the consumer. In fact, to the farmer. In fact, you may recall that in the end of February this year, when the prices had really crashed, we intervened through NAFED and NCCF in the Lasalgaon market and provided relief to the farmers. So farmers' interests are primary, and they will never be compromised. But for the consumers, the prices would not be allowed to increase beyond a certain point, but in addition to the seasonality factor.
I'll come to what beyond a certain point means, Mr. Singh, but let's address continue with the argument as far as the farmers are concerned, because you said that the decision is now to procure another 2 lakh metric tons. What is the time period that you're looking at in terms of that procurement? And based on the formula, what would the average procurement cost per kg be?
So average procurement cost is never to the discomfort of the farmer. It is what is prevailing in the mandi in last few days, and then we have a system of calculating the modal price. So it does not hurt the farmer at all. And to answer your other question, the procurement will start now, and it will continue till December, when we reach the figure of 5 lakh tons as buffer.
Okay. Like we saw in the case of tomatoes, you are going to be offering subsidized onions as well. Again, a similar pattern. How are you identifying the regions where you will be putting out these subsidized onions in the market? And for what period do you anticipate having to do this?
So, if you realize the primary objective is to provide relief to the consumer. So as long as the situation demands, like we are doing in tomatoes, and I would like to tell you here that due to our nudging, and of course due to increased arrivals at different places, the tomato prices have really come back to almost normal. And we would like to do the same for onions as well. And we would like to nudge the market in the right direction so that the traders do not take unnecessary advantage of this. Because, when times are difficult, there is a tendency among some of the traders to take advantage of the situation. And you know it better than I that prices of these commodities, especially those who are perishable, is not just a function of demand and supply, but it's function of, the messaging and the other parameters that we have. So government has to be acting cautiously and try to nudge the market in the right direction.
Right. On tomatoes specifically, as you said that, first week of August was when you had anticipated that we would start to see additional supply coming into the market, and we have now started to see prices cool off. What is the average price as of today nationwide? And do you believe that there is a need now to completely wind down intervention as far as tomatoes are concerned?
So let me read out the numbers in the major markets today. So Delhi, which was, I'm just comparing figures of 13 July and 20th August. Delhi used to be 200 to 240 retail, I'm talking, it's 50 to 70 now. Lucknow used to be 160 to 180, it's 60 to 70 now. Varanasi used to be 160 to 170, it is 50 to 70 now. Kanpur used to be 170, 180, it is 60 to 70 now. And Jaipur used to be 180 to 200, it's 50 to 60 now. So you see the retail prices are now in the range of 50 to 70 in the major geographies. And correspondingly, the wholesale is also in the range of 40 to 45 in most of the geographies that I just mentioned. So this is how the constant nudging and adding supplies to these pain points, government has been able to manage to bring down the tomato prices.
So no requirement for any further intervention and a complete winding down of the measures that were undertaken for tomatoes specifically?
So as I said, we watch the situation every day. Until absolute normalcy is achieved, we will continue to intervene because the primary objective is to provide relief to the consumers from this unnecessary volatility of prices.
So both on onions as well as tomatoes, in terms of tomatoes, where do you feel the need to intervene at this point in time? Which are the regions geographically that you feel the need to intervene at this point in time? And on onions specifically, again, which are the sectors, which are the regions that are most vulnerable to the kind of price shock that we've seen?
Also, onions, we've already started intervening both in wholesale and retail. Wholesale, the intervention started 4 days back, and as we speak, we have already infused 2,500 tons in various markets in Telangana, Andhra Pradesh, Guwahati, Delhi, and Himachal Pradesh. And the retail starts in Delhi today. It has actually already started at 25 rupees a kg. So we're trying to handle the problem from both directions, adding more supplies in the wholesale market at the market-driven prices, and providing relief to the consumers by providing 25 rupees a kg in retail. So I think this double-pronged approach will probably help contain unnecessary rise in the prices.
My final question to you both, if you could give us a quantum on the supply side measures that you just spoke of, as well as what you're hoping to do by way of the subsidized onions that will hit the retail market. If you can share with us the quantums before I leave you.
So, as I said, in last 4 days, we have infused about 2,500 metric tons on the wholesale side. And on the retail side, our approach will be very calibrated, and we will see how the market behaves. But the objective is that we will not let the consumer down, and it's all about providing relief to the consumers for these commodities, which are essential components of our kitchen.
So no tears, hopefully, this time around on account of rising onion prices. That is the hope and the belief of the government as it intervenes in the onion market as it did to bring down tomato prices, which, according to the Consumer Affairs Secretary, are down almost half in comparison to the highs that we saw for 150 to 200 rupees, now down to between 50 to 70 on an average across different parts of the country. Mr. Singh, always a pleasure. Appreciate you joining us here on CNBC TV18. Thanks very much for your time. That is the Consumer Affairs Secretary on the government's measures to try and cool down onion prices. But speaking of